Good morning. This is Arlan Suderman, Chief Commodities Economist at StoneX, coming to you from the trading floor on this December 23rd as we come up on the Christmas and New Year holiday and the war intensifies surrounding Ukraine. We used to say the war in Ukraine, but it has now gone far beyond those borders, and that does have implications for the commodity markets as we look at things today. We saw another Russian attack on Ukraine overnight with missiles and drones, even killing some civilians. The attacks on the energy infrastructure have continued, but especially intensified on the port facilities, especially at Odessa. Now, as we look at the attacks on Odessa, their primary export terminal there now, we're seeing reports that it's only operating at about 20% capacity, which is slowing the movement of products out of Ukraine, agricultural commodities out of Ukraine. And so that is something we need to be monitoring. Ukraine is looking to once again try to step up exports to the West over land, over rail, by truck, etc. That is a much slower way, much less efficient way, more costly way to export, but they're running into more and more problems trying to export through their primary port of Odessa. In fact, we had the reports yesterday of soy oil being spilled out onto the streets and on fire. The tanks on fire after a strike there. Even a ship that was struck as well. I believe allegedly inadvertently struck. And I saw pictures, in fact, of millions of gallons of oil spilling down the streets of there at Odessa as if it was a flood of rainfall, but instead it was a flood of soybean oil. And in fact, there was one ship overnight hit that was carrying soybeans. I believe it was a Lebanese flagged ship that was hit. And so this continues to intensify. Now, Russia is really stepping up the attacks on Ukraine's export capabilities after Ukraine's escalated the attacks on its shadow fleet that's hauling sanctioned oil out of Russia. And initially, those were ships within the Black Sea, but now that has spread to attacks on ships in the Caspian Sea, and even on Friday, one in the Mediterranean Sea near Libya. And so this has angered President Putin of Russia. He's even threatened to attack ships carrying commodities for countries who have supported Ukraine. And that is the risk that I want to focus on today. That risk is generally considered to still be relatively low, that we would shut down commodity movement out of the Black Sea region. But that risk is greater today than it was a week ago, and greater a week ago than it was the week before. And it's slowly escalating higher. And that's one reason that we have seen support in the ag commodities, especially in the wheat market and at times in the crude oil market, especially yesterday as well, although Venezuela and our seizing of ships there are also having an effect on the crude oil market, providing that support, tightening up supply. Let's keep in mind on February 24th, when Russia invaded Ukraine in 2022, nearly 4 years ago, commodity prices exploded higher on the fear that we would adversely impact commodities coming out of that commodity rich area of the world. And we soon saw that both countries were going to respect the flow of commodities and allow it to flow, and then prices went back down to multi-year lows. But there's very little war risk in these markets right now. I'm not saying it's going to, but it's something that traders are paying attention to, and particularly ahead of the holidays now. And many traders want to take an extended time off with family and not be involved in the markets. They don't want to be left with short positions on in the possibility that something might like happen like that over the holiday period when they're absent, and catch them on the wrong side of the market. So getting out of some short positions. And so that has given us some support as we head into Christmas. Of course, we have a shortened trading day on December 24th. Markets are closed on December 5 for Christmas and open the morning of December 26th for what is expected to be a low volume trading day. And then that low volume to some extent will continue through next week as well as we go into the new year and really probably not really get going until the week of January 5th once again. So you can get some erratic price movement. And that leaves the traders at some risk if we do get a headline that can really move the markets or something like that. We did get USDA to update another week of export sales. They are now up to the week ending December 11th in export sales that they have announced. And so as we look at that data, it showed that export sales for the week of December 11th in the ag commodities included 68.7 million bushels of corn and 88 million bushels of old crop soybeans, 1 million bushels of new crop soybeans, 15.9 million bushels of old crop wheat, 3/10 of a million bushels of new crop wheat, and 9.9 million bushels of grain sorghum. As we break that down, we saw that Japan was a featured buyer of U.S. corn during the week at a net 13.9 million bushels, followed by South Korea 10.4 and Mexico at 9.6 million bushels. China was the featured buyer of U.S. soybeans in the week ending December 11th at a net 50.8 million bushels, followed by unknown destinations at 21.8 million bushels. Now, if you look at where we sit with Chinese soybean sales right now, we see that China has USDA has currently confirmed the sale of 223 million bushels of soybeans to China. Based on our sources, we believe that China has bought about 100 million bushels more than that USDA has not yet confirmed. So that would bring us up to around 320 million bushels. It committed to buying 441 million bushels in the trade agreement, which we haven't seen yet, by the way, because it's not completed yet. But that's what the White House has reported. We believe we're more optimistic, I should say, that they will buy that 12 million metric tons, but they really lack the space to put it right now. And their ports are going to be very soon very full of ships coming from Brazil. In fact, Brazil has already started harvesting this next year's crop. Now, it's very early harvest. They're really not going to get any meaningful momentum going until like mid-January, but then the flood of soybeans to Chinese ports is really going to start. So we believe the shipment of those soybeans that have all been basically bought by the state grain buyers to go into their reserves is going to be spread out over much of the coming year, and some of it may even get rolled into the next marketing year that starts on September 1. So that's what we're going to have to watch. Sales may very well pick up with the pace needed to hit USDA's target for the year. We think it'll be just short of that. But what will shipments do? And that's why my estimate on export sales for this coming year are about 85 million bushels below where USDA is at. Now, I counter that with a crush target that is about 90 million bushels above where USDA is at. And I do see more upside potential to that depending on what the EPA comes out with on the final regulations for the biofuel program for biomass diesel production and the timing of when they finally come out with that. That's going to be critical. I covered that in a previous video. You can go back and look at that. But I do think overall in export sales to China, we're going to fall short, and overall we're going to fall short, offset by the shipments that by the crush of soybeans. Now, on the corn side, we continue to be robust in corn export sales. When we look overall at corn export sales, we see that they marketing year to date through December 11th, they exceed the seasonal pace needed to hit USDA's target by 270 million bushels. That's down from 281 million bushels the previous week. That is slowly working its way a little bit lower right now, but still pretty robust. I think there's the potential for us to see export sales go another 100 million bushels higher than where USDA currently has it, which is already at a record 3.2 billion bushels. So we're going to continue to monitor that. Marketing year-to-date soybean export sales, by the way, fall short of the seasonal pace needed to hit USDA's target by 227 million bushels, but that's down that deficit is about 100 million bushels shorter than what it was just a few weeks ago. So we are dynamically eating into that. And I think that will continue to shrink as I indicated. So this is Arlan Suderman once again coming to you from the trading floor. I wish those of you who believe in the birth of our Savior a Merry Christmas. And we'll be back with you after Christmas once again. Should be back ahead of the new year with another update of what's going on in the markets. And until then, be sure to like and subscribe to continue to get these updates from the trading floor.